Our first accounting principle is the entity principle, having done all the qualitative characteristics. The entity principle, if you remember from relevance, is actually a part of relevance. So they are very, very related. The definition is the business must be a separate accounting entity from its owner and other entities that the business owner may actually have. That means that your transactions and financial records of one business should be kept separate from the owner's personal transactions and any other businesses owned by the owner. So, looking at some examples, let's say the owner of a business took $200 out of the firm's cash register to buy some clothes for a party they were attending on the weekend. Should this be recorded as an expense for the business? So we have one entity on the left, which is the business, and one entity on the right, which is the owner. The answer there is no. The $200 should be recorded as a personal transaction. They shouldn't be a business expense. The owner needs to record that as drawings and not as a clothing expense for the business. Another example would be Sally Smith owns two businesses, a hairdressing salon and a sports store. The salon receives a $700 phone bill, but the firm's bank account is empty. However, there's $10,000 in the sports store's bank account, so Sally pays it from this account. Can you do that? Absolutely not. This will be breaching the entity principle, as the transactions of each entity must be kept separate. Last example would be, because she owns two businesses, she thinks it would be easier to combine all their information into one income statement rather than prepare a separate one for each. So she's got the hairdressing salon and the sports store. She's combined those into one giant income statement. Is that acceptable? It's not. What she should do is keep the reports of each business separate. Financial records must be prepared for each entity and they must be independent of the others. She can combine them if she wants, but she still has to complete separate ones for each. So they are separate accounting entities with separate accounting reports.